Okay, I'm starting this video series on finding great deals. I've got to make it fun, informative, and of course have action steps. But where do I start? Do I start with lists? Do I start with marketing? Do I start with smoke signals? I've got to start at the beginning. Before you start marketing or even sending out one mailer, you have to know the market that you're targeting works for your investment strategy.
And it's got to start with market analysis. In this video, I'm going to show you how to analyze any market so you can effectively and efficiently find great deals. And we start right now. Hey there, friends. My name is Anson Young, and I've been in real estate full-time for the last 14 years as a house flipper, wholesaler, and a real estate agent. I also wrote the book, Finding and Funding Great Deals, which is out through Bigger Pockets Publishing. I think it's really good. I think you'll like it. If you want even more in-depth information or want to just explore finding deals, I'm going to leave a 20% off discount code at the end of this video for the Bigger Pockets store for my book. Since you're right here on Bigger Pockets YouTube channel, please make sure to throw them a like, subscribe, leave a comment, all that great stuff. They would be very appreciative. They need more subscribers. As I said in the intro, the goal of this video series is to be fun, informative, and of course have great action steps, which we'll leave at the end of the video. We want to make sure that you're taking action on this information so that you too can go find good deals. No, find great deals. Before we can do anything at all with investing, we have to make sure that the market that we're trying to analyze can support the type of investing that we want to do. And of course, it's a great idea to figure this out way before we even start investing rather than afterwards. I'm sure you can understand why. So whether this market is right in your backyard or it's 11 states away, much of the principles are the same. And of course, a lot of what I cover today is going to very much depend on your investment strategy and your goals. If you want to flip 100 houses in a market while I just want to buy 2 rentals, those are 2 very different goals, and we're going to attack the market in different ways. Things that'll work for you may not work for me, and vice versa.
Okay, so we're going to start off in phase 1. This is the high-level things that you're looking for in the market. And it's going to start with just a lot of online research. The high-level things that I actually look out for are the following: population, crime rate, growth, jobs, schools, median home and rent prices, and appreciation. And at the end, we'll throw in one more just general Google thing that I like to do: population. So you really need to know if the market is big enough and can support what you want to do. This means that if you are a house flipper that wants to flip 100 houses, is that college town that's only 20,000 people in population, is that going to work for you? If you want to buy 1 rental in that college town, your goals are probably very realistic. Whereas if you're the flipper, you might come to an inventory crunch really quick with that low of population. I personally really like cities that are around 100,000 to 250,000. And that way there's enough inventory to do whatever I want to do. And there's also just a little bit less competition than in those huge mega markets that are 1 million plus. The best way to look this information up is just a Google search. Type in your city name and population, and you're going to get exactly what you're looking for. You can also look at the Census Bureau. You can also look at just Wikipedia for that city. Crime rate. This is one of those metrics that's a personal risk assessment choice for you in your business. There's crime everywhere, unfortunately, but you're going to want to know how much you can really tolerate within what you're trying to do. So even the nicest cities have some kind of crime. But if you're a landlord, you might want to start looking at property crime or bodily crime, whatever makes sense to you, because your tenants and your end buyers ultimately have to live in this neighborhood or this area. So is it safe enough to attract the kind of tenants or end buyers that you want to attract? And this information is also really easy to get a hold of. I go to citydata.com, and I also go to local police websites. A lot of times there are statistics on the types of crimes that they're finding in those areas. The next one is growth. This is a pretty big one when I'm analyzing a new market. Is the market that you're looking at investing in, is it actually attracting new people to the area? Is it a growing market versus a dying out market, or maybe a stagnant market? More people moving to the area puts a pressure on demand and makes it so that the properties that you're trying to rent or the properties that you're trying to sell, there are enough buyers or tenants that are moving into the area that are going to want to buy or lease from you. The other things you're going to want to check out that are just right around growth is if there's new construction in town. Are there new housing developments going up? New restaurants going in? New shopping centers? Is there apartment buildings, retirement homes? Any kind of new expanding construction that you can check in on. This also includes light rail, which is coming to a lot of cities in the West and is expanding a lot of markets right around those light rail stations. So if you can see that there's outside investment coming in and focusing on building inside your market, you can be pretty confident that it's a growing market. One of the easiest ways to check this out is just to Google your city name and then population growth to see if more people are moving there or not. And then you can also search in those areas for new construction, for anything new that's going in. Another big one is going to be jobs. Now, this is both the types of jobs and job growth in that market. With the types of jobs, I like to see a variety of jobs that are inside that market. I want to see that there's not just one big employer that's driving the entire market. Because what happens when that one big employer goes away? And you see this with a lot of smaller towns where Walmart or a military base is the biggest employer in town. Walmart has been known to close stores, and also military base can pull out anytime, really. And when that happens, there goes a huge chunk of what keeps people in that town. And if you have 20 rentals and Walmart pulls out, you're really going to be in a world of hurt. Another thing is job growth. Are there new jobs coming to the area? Are there companies that are moving to town? Maybe their headquarters are coming to town. If Amazon's coming to town, you know that that town is growing enough for a huge company like Amazon to put the investment into building a new HQ or distribution center in your area. The last thing you want is to invest heavily into a city where the job growth is a negative. The easiest way to check on the types of jobs is if you go to city data and you put in your city, you can easily find the percentages of the types of jobs that are in the area. And a lot of times you can find the biggest employers as well. For job growth, I just type in job growth and then your city, and it should come up pretty quick. Whether it's a business journal, Google hit, whatever it is, you should be able to look pretty quickly to find out where the job growth is in your potential market. Another big one is schools. A lot of our tenants and a lot of the people buying our flips, well, they have kids, and having good schools is important to them. If it's important to your tenant or your end buyer, of course it has to be important to you. And so I like to really invest in areas that have really good schools, so then I know that I can fill that vacancy really quickly, or I can sell that flip right away. Because having good schools is an easier sale almost every time. Besides a general Google search, which I feel like I've said a lot in this video, the two sites that I really like is schooldigger.com and greatschools.org. And in here, you can see the ratings of the best schools in the area. And you should be factoring in the school quality into your market research. Next is the median home and rent price. So let's say that you have $100,000 that you want to invest and you want to buy all cash. Now you're going to obviously want to know if the median home price in your market is $400,000, you're going to have to get a loan or you're going to have to choose a new market. And knowing the median rent price gets you a pretty good idea of, once you know how much houses are worth and what the median rent price is, you can factor in if those kind of rental numbers work for you in your business. And the easiest way to look this up is through a Google search. Also, you can go to Rent-A-Meter, and there's a few other rental sites, some of the Zillow sites, that will show you kind of the median rent for the area based on bedroom and bathroom. Another good metric to know is appreciation. How much are homes actually gaining in value over time? Are you in just some weird market where they're stagnant while the rest of the country is going up? Does appreciation play into your investment strategy? And in here, you're going to want to know how much these houses are going up. Besides the go-to Google search, you could also look at the NAR, which is the National Association of Realtors site, or you can ask an agent. Just say, hey, can you send me over information on appreciation in the last 12 months? But a simple Google search should get you there. In this last category is really just kind of a general internet search. I start off on Bigger Pockets and I'll look up the city name and I'll look through threads to see what other investors are experiencing in this market. I'll also do a few very generic Google searches like, is Aurora safe? Immediately, you'll be surprised what comes up in some of these questions, but you'll find out really quick what people are saying. You know, the people on the ground who really live here are saying about the city that you want to invest in. There's a lot of different forums, a lot of different areas inside Google, inside of Bigger Pockets, where you can get this kind of boots on the ground type knowledge that you probably couldn't get just through searching through data like we have done so far. We've made it to phase 2. And in phase 2, we're really going to figure out how the market is transacting. In the first part of phase 2, we're going to work on demand. How many cash buyers or investor buyers are actually buying in this market? What are the hottest zip codes in that area that you chose? Can the market actually support what you want to do? The very first step is we got to open up ListSource. Everything we're doing today is completely free. If there's an option to buy something, I'll let you know before you click on it and accidentally buy something crazy. But let's get started. So you just go straight to listsource.com. So you're going to go to build a list. The very first thing is geography. I want to select my city. And a fun thing with ListSource is to watch this little orange area right here go up and down. This is the amount of properties that are available based on your search criteria. And this is really good free information that you can look at. So if you narrow down your list and you go, oh man, 10,000 is too many that I want to market to, you can either narrow it down further or you can actually select and just buy part of the list, which is pretty cool. I'm going to select the property type right here, property type. And if I just want single family, I can just select single family. If you want condos, if you want mobile homes, if you want land in there, you could do that as well. I'm going to throw in condos just for fun and townhomes. What I'm looking for in demand is investors who are buying. So I want to select a criteria that will tell me that investors are buying here. And this is where you go to options and then absentee own. And this will cut out all the owner occupants. So these are just investors or people who might have a vacation home if it's the kind of area where vacation homes are pretty common. And over here, it's going to show corporate owned properties. Now, I don't mind having LLCs in there because I invest in LLCs, and so I'm going to show up on this list if you were to pull it in this area. What I want to do is I want to figure out how many of these have sold in the last 6 months to a year. Back under property, and here I'm going to select last market sale date. And down here, I'll throw in the last 6 months. This shows me that 585 properties have sold in the last 6 months in Aurora, Colorado to investors or to LLCs or could be vacation buyers. If I really want to open it up just a little bit further, I could go the last 12 months. That should give me roughly double. It's pretty close. You could also restrict from here for the last market sale price. So if you know that it's an area where there might be a lot of $1 million homes and that's just not what you're investing in, you could cut out by price. So if you only want, let's say, median home price and lower, you could absolutely add that in right now. So right now we can see there's 925 properties that have sold in the last year to investors. I feel like that's a good amount of demand. So one thing that we want to do from here is we want to check on the hottest zip codes in this area. And now you might think that you have to buy this list in order to do that, but you actually don't. So here's a pro tip. We're going to go down and we're going to click on purchase list, but don't worry, we're not going to actually buy it. You don't have to put in your credit card or anything. Purchase partial list. And now we're going to sort it by zip codes. So right here, it's telling me the top zip codes for my criteria. So these are where the investors are buying the most. And you can actually export this for free. It'll send it to you in an Excel format. There's these zip codes right here where you can find the most deals in this market. One more pro tip. If you're a wholesaler and you go ahead and you buy this list for $30, $40, $50 or whatever it's going to cost you, here are all of the investors who bought in your market in the last year. Do you think that's a pretty powerful buyer's list to start off with for a low price? And even in here, it'll show you duplicates. So if there's one investor or two investors that are buying 10, 20, or 30 properties a year, you of course are going to want to get in front of them because you want to have them on your buyer's list. So that was part one of phase two. Now that I know the top 5 zip codes in that area, I'm going to use that information to figure out the kind of supply that is in that area. Now we got to figure out, are there enough people that we can market to do what we want to do? And that's going to land us back into ListSource. What I'm going to do is I'm going to take those 5 zip codes and I'm going to feed them to ListSource. And I want there to be absentee owners. I want to just try and capture this low-hanging fruit in this market. We're going to talk about lists about 5 episodes down the road. We're not quite there yet, but we're just going to see if this low-hanging fruit type list is something that we can pursue. One thing I want to change though is the corporate ownership. I do care if that these are corporations. Your lowest hanging fruit are going to be absentee owners, just kind of a mom and pop landlord type. Now there's 2 more criteria that I want to look at. I want to look at equity. So I'm going to go to property. I'm going to select equity as a percent. And to me, high equity is anywhere between 40 to 100% equity. One more thing I want to check out is length of ownership. Now, a lot of people target homeowners who have owned their properties for 10 years or more, and I think that that's a pretty good metric. So I'm going to go back to property, length of residence, 10 plus years, and see what that changes the numbers. And I'm actually going to bump up my equity percentage just a tiny bit. I'm fairly okay with these numbers right here. So this is showing me that there's 3,000 potential people to market to, which to me is just fine. 3,000 is great for this one list. There's going to be more lists that come down the road, but this is great for this one list. We've done our high altitude market research in phase 1. In phase 2, we figured out some supply and demand. And now here in phase 3, we're going to really kind of dive into these neighborhoods and figure out what's going on. How much properties that are fixed up are selling for, how much they're renting for, and what they were bought for. I call this process baselining. And while it's fairly simple, it's actually pretty time consuming. And if you're an investor or if you're interested in real estate, you're probably finding yourself doing this on your free time. One of my favorite sites for this is actually Redfin.
I just wanted to interrupt this just for 1 second. If you analyze markets in a different way, please leave a comment down below, and I'd love to hear from you because I'm always trying to learn myself. Back to the other Anson.
Favorite sites for this is actually Redfin. Of course, my favorite's MLS, but Redfin's pretty dang close. So what I did is I spent about 5 or 10 minutes looking around for exactly what I'm going to show you. The thing that I like is once I've zeroed into the zip code that I want to, all the properties here on the right, I can just flip through pictures and I can tell pretty easily if they're flipped or not. My focus was on this one right here. So I look at it and this screams flip from a long ways away. And what I can do is I can now tell, okay, a fully fixed up 4-bedroom, 3-bath at this square footage in this neighborhood sells for roughly $430,000. On some of these, you can go in and see when they bought it and how much they bought it for if your market supports that kind of data. And so here I can see that they actually bought this house last year for $315,000 and they're now selling it for $430,000. So I know that if I'm going to flip in this neighborhood, anything around that $315,000 price should be a deal based on just some generic baselining. And you're going to want to do this over and over and over again in those hot zip codes if you really want to invest into this market. So I actually just stumbled on another one, just kind of poking around, looking at the pictures. It looks like a flipped property and it's currently for sale for $355,000. And they actually bought it just a few months ago for $278,000. And so with that spread, I can kind of backwards engineer, okay, 355 to 278, estimate kind of how much fix up was needed, and then maybe some closing costs and some other investor costs. And just to see if like, okay, in a general general sense with baselining. Does this neighborhood or this market work for flips for my margins? Can I find better deals than 278? Another quick way to figure out flipped properties, go down to the keywords and look up renovated. And if you look, these are likely flip properties. This one looks like a flip property. And indeed, we found another one. This one sold in August of last year for $260,000, and now it is relisted for $415,000. You can also use this field to find fixer-upper properties by typing in fixer-upper and seeing what shows up in here, looking maybe for sold properties in that area as well. With baselining, as a wholesaler, you can now see roughly what investors are buying properties at in those areas. And as a landlord, you can definitely look through rental listings to see what properties are renting for in that area, your typical 3-bedroom or 4-bedroom. And now that you've baselined the neighborhood, you can see if those rental numbers work for you. If you bought that property for $315 and it rents for $2,600, if those numbers really work for you and your business. The goal with baselining is to do this over and over so you have a good idea, maybe set it up in a spreadsheet or on a sheet of paper of what different neighborhoods are doing. So then you have a better idea of what properties are selling for, how much they're being bought for, and how much they're being rented at.
All right, we've covered 3 different phases of market analysis so that you can have a better idea of the market that you're looking at to make sure that it matches your investment strategy. Now it's time for our action steps. Because what good is this information if you're not going to actually put it into action? Step 1 is really easy. Just get started. Start digging into the online tools that I provided, choose a market, and then go through phase 1 and phase 2. See if you can find the 5 hot zip codes in those areas, and then just start digging in and figuring out what's going on. Step 2, baseline 2 or 3 areas inside those 5 zip codes. Really start finding out what the low properties are selling for, what the high properties are selling for, what properties are renting for, and of course, depending on your goals and your investment strategy, if that is starting to make sense for what you want to do. And step 3 is to repeat the process a number of times. Your first market may not be the one that makes sense. And how would you know unless you go into 2, 3, or 4 different markets to really analyze and dive deep on the information? Pick an hour north or an hour south or 5 states away or a place where your cousin Joe lives. A lot of time the data doesn't lie. It'll get you 90% of the way there. The ultimate goal would be to drop you into any market, and you should have the tools now to analyze and see if it's a market that can support your type of investment. That's actually a great idea. I think that we should come up with investor airlines and we just parachute people in and see how long it takes them to analyze the market and start doing deals. Maybe I'll talk to the Bigger Pockets honchos and see if we can get that started. So as promised, here is the code for 20% off at the Bigger Pockets bookstore for the book, Finding and Funding Great Deals. In episode 2, we're going to cover networking to find deals. So please stay tuned for that. Again, I'm Anson Young. Thank you so much for your time and of course for your attention, and get out there and start finding great deals.